Thank you for taking time out of your busy schedules today. Today, we're announcing the second quarter financial results. This is an executive summary of the second quarter. Moving on to the summary of business results from January to June. Revenue reached a record high. Internet infrastructure grew steadily, and finance recovered due to improvements in FX profitability. However, profit was less than that of last year as internet finance lagged in the first quarter, and also due to one-time expenses in the second quarter. We will catch up on the forecast for this term with strong trends in internet infrastructure and recovery in internet finance in the second half of the year. Regarding net profit, we expect a reduction in tax burden, so there are no changes to our current plans. Next is a summary of each segment for the second quarter. Net sales exceeded 20 billion yen in internet infrastructure. Profit was up year-on-year despite strategic investment in Mine and Z.com and the one-time expense of 80 million yen for commission developments. Internet finance decreased in revenue and profit compared to the 2016 fiscal year, during which profit reached a record high in the FX business due to Brexit. Profitability is improving steadily quarter-on-quarter since bottoming out in February. Although there were not that many FX transactions during Q2, we feel that position management and the optimization of cover transactions are producing good results because of several technological improvements and data analyses. In online advertising and media, revenue increased and profit decreased. We are getting closer to reaping a harvest for new and existing products. Ad technology shifts are progressing smoothly, and we are working on online advertisement and media improvements. In mobile entertainment, revenue decreased due to a late launch of new titles. One new title will be launched in the fourth quarter. This is an analysis of year-on-year growth in operating profit by quarter. Although internet infrastructure grew, operating profit decreased by 3.96 billion yen due to other temporary branding costs and Brexit's negative impact on internet finance. I'll move on now to the analysis of quarter-on-quarter growth in operating profit. Despite an increase in costs due to temporary expenses in internet infrastructure and branding costs, please notice the recovery of our finance business. Next is a summary of the second quarter financial results. This is historical performance by quarter. Revenue increased 6.3%, and profit increased 11.9% compared to the previous quarter. Revenue reached a record high at 38.2 billion yen. Revenue in infrastructure exceeded 20 billion yen and drove the group's net sales to a record high. Internet infrastructure has been growing steadily based on our firm foundation of recurring revenue and increasing transaction revenue. Moving on to operating profit. You'll notice the recovery in internet finance compared to Q1, and that profit in internet infrastructure is continuing to expand. We think we can accelerate this trend more in Q3 and beyond. Here you can see an overview of profit and loss. I'd like to explain the factors that caused net profit to drop in the first half of the year. Although profit before tax decreased from 8.19 billion to 6.84 billion yen, income tax increased and the tax burden rose 12%. We expect to see a reduction in the tax burden over the second half of the year. This slide shows the balance sheet. Interest-bearing debt decreased due to the impact of boosting liquidity at the end of 2016, when capital needs arose at GMO Click Securities. This slide shows consolidated cash flow from January to June. As discussed earlier on the balance sheet slide, operating and financial cash flows were affected temporarily due to the increase of customer assets in internet finance. Next, this slide shows the market cap and equity share of our listed companies. Moving on to the group overview. This diagram shows GMO Internet's 4 segments. Our customer base is expanding across all segments, with growth in infrastructure contracts and customer accounts in FX and securities. At the end of June, the number of partners totaled 5,275 people, out of which 44.2% were engineers and creators. We develop our own services, and our goal is to see that ratio of creators surpass 50%. However, that ratio fell in Q2 as new employees were temporarily assigned to corporate divisions and due to strengthening support within the finance segment. Next is a summary of each segment. This slide shows the composition of the Internet Infrastructure segment. All products in this segment continue to be number 1 in their respective markets. The next 2 graphs show the growth of Internet Infrastructure's net sales and operating profit for the second quarter of the past 5 years. In addition to conventional recurring revenue, transaction revenue from payment services and MINE has accelerated our revenue growth. Also, our provider business is expanding. Profits were up despite spending 120 million yen on MINE advertisements and the one-time cost of 80 million yen for commissioned developments. This is historical performance by quarter. Orange shows strategic investments in Z.com, DotShop, and MINE. In Q2, strategic investments increased by 250 million yen compared to Q1 and revenue decreased. This shows the net sales for each subsegment. Due to the combination of recurring and transaction revenues, net sales continues to see an upward trend. This slide shows the summary for listed companies in Internet Infrastructure. GMO Payment Gateway did well in each business area. At GMO Cloud, SSL had favorable conditions, and GMO Paypal reached a record high in revenue, so both companies saw steady growth. In Internet Infrastructure, the number of contracts came to a total of 8.47 million. Moving on to Internet Finance. The next 2 graphs show the growth of Internet Finance's net sales and operating profit in the second quarter of the past 5 years. In 2016, the FX business posted a record high in revenue due to Brexit. Figures in finance fell as transaction volume decreased significantly in Q2. I'll come back to this later. This graph shows the quarter-on-quarter growth of Internet Finance's net sales and operating profit. Profitability declined temporarily in Q1, but recovered through various analyzation and strategies, such as position management and optimization of covered transactions, as shown on this slide. This graph shows quarterly transaction volume trends. Despite extremely low liquidity and the decrease in earnings opportunity in Q2, a certain amount of tuning delivered good results. This slide shows GMO Click Holdings' major KPIs. We are responding flexibly to the ever-changing market environment and will continue to expand our customer base and improve our services. Next is online advertising and media. Next are online advertising and media's trends for the second quarter of the past 5 years. As for revenue, ad technology products performed favorably, and online advertising has steady 2-digit growth. On the other hand, there was a drop in the sales of existing products in online media, and the segment's sales totaled less than that of last year due to changes in advertisement distribution regulations, resulting in 1-digit growth. As for profit, we are getting closer to reaping a harvest for new and existing products. Ad technology products grew but couldn't cover the drop in net sales for existing high-margin media products. This slide shows performance trends by quarter. We are getting closer to reaping a harvest for new and existing products. Despite continued progress in our ad technology shift over the past few years, growth is not yet visible. We will continue to work on improving profit margins. Shown here are revenue trends in each segment by quarter. In online advertising, in-house products, especially Akane, are doing well. This slide shows the summary of listed companies related to online advertisement and media. At GMO Ad Partners, in addition to advertising products with industry-specific strategies, ad tech products Akane and Taxel have performed favorably. At GMO Tech, where internal restructuring is underway, O2O businesses, which generate ongoing recurring revenue, are achieving positive figures as planned. At GMO Research, overseas business is doing well. Strengthening of sales is delivering good results. GMO Media saw a decrease in ad revenue due to changes in advertisement distribution regulations. Moving on to mobile entertainment and other businesses. In mobile entertainment business, we have been working on getting costs under control, and new titles will be launched in the fourth quarter. In our incubation business, we posted a gain via sale of listed shares that went public in 2016. Other businesses incurred one-time branding costs. Before moving on to the group strategy, I'd like to give an update on our partners since a recent incident. GMO Ad Partners and GMO Payment Gateway have taken measures to enhance corporate governance as independent listed companies. We are taking this opportunity to provide educational activities to enhance partners' compliance awareness, strengthen organization structures, and create company processes that are sustainable. Next is DotShop. The number of DotShop domain registrations came to 230,000 at the end of June, and as of today, they are at 250,000 and growing steadily. Domain renewals will begin at the end of September. In addition to strengthening partnerships with overseas domain registrars, major e-commerce sites have also been utilizing our domain, so I'd like to share a few examples. Nike.shop, Otto.shop, eBay.shop, and Amazon.shop are using .shop domains to redirect to their conventional websites. We'll make sure .shop gets a lot of visibility by providing more such opportunities to various e-commerce sites. This chart shows registrations by country. The overseas ratio comes to around 85%. In our group, no other products have expanded globally in such a short time. We will continue to create more businesses overseas. Next is finance and payment. Developments in each area are continuing to progress steadily. Internet banking is developing systems steadily, and now has planning, marketing, and operations divisions. On October 1st, GMO Click Holdings will change its name to GMO Financial Holdings. The group will optimize group-wide engineer resources in securities, FX, and virtual currency businesses, and conduct quality management of UI/UX as a web service. Also, internet banking makes full use of the expertise the group has cultivated until now, not only for bank and security services, but technologically and for user-friendly web services. The virtual currency business was launched at the end of May and has made a good start but is still struggling. Because of technological strength cultivated through the securities and FX businesses, and our confidence in the company, we have a good chance of success. Only Bitcoin is currently available, but we will offer more transaction opportunities in the future by expanding currency pair offerings. We haven't begun promotions yet, but based on the domestic market's reaction, such as customer acquisition and the rise in transaction volume, GMOZ.com coin will utilize the GMO brand by changing its name to GMO Coin, and will run full-scale promotions in the second half of the year. Next, I would like to talk about our global strategy. GMO Internet Group has already expanded to 55 locations in 18 countries and includes 1,168 partners. We acquired an internet securities license in Thailand in July and will launch the business this fall. The domain server business, which offers services under the Z.com brand, made a start in Thailand and Vietnam. Overseas sales doubled year-on-year, and the overseas sales ratio was 6%. For the internet infrastructure business in Southeast Asia, marketing was tailored to local internet prevalence and usage. In addition to expanding Z.com's customer base, DotShop and the SSL wholesale business also saw steady growth. Shown here is a case of infrastructure service usage overseas. In Myanmar, banks, the government, and major telecommunications providers use SSL. Our cloud services are mainly used by large institutions, and business transactions are increasing steadily. This slide shows that Myanmar's government-run visa application site, eVisa, uses SSL. When applying for a visa, this Z.com secure sticker appears on the website. We expect the overseas sales ratio to continue to increase, so please be expectant about both our domestic and overseas businesses. We're coming to the end of the second quarter presentation. There's been steady growth in infrastructure, and even greater growth is expected over the second half of the year. Although finance services were affected by the market environment, improving the earnings ratio by utilizing the group's technological strength led to sound results. Regarding the progress of our internet banking and virtual currency businesses, we will announce the necessary information, so please look forward to it. In online advertising and media, we are getting closer to reaping a harvest for new and existing products, but issues remain. We are developing products to suit the market's needs, so we strongly believe that we'll be able to deliver good results in the midterm. With the infrastructure business, which has seen steady growth, innovative financial services, and a solid customer base, the GMO Internet Group will continue to grow even further. Thank you for your attention today. Internet for everyone.